Good morning, everybody. Welcome to the September 7th, 2023 edition of the Premarket Prep session. I'm your host, and this is part of it, right? Tuning in to get the important news, notes, analysis, trade ideas necessary to make sure that money is working for you, right? That doesn't mean each and every day that it doubles or triples, but that means that it does what is in your cost. We all know that there are some times in life where you're not necessarily trying to thrive, just survive. You're like, look, if I can take care of my responsibilities and my obligations, that'll be a win. Sometimes your money does the exact same thing, right? Or needs to be doing the exact same thing. So that's part of it. But yeah, going and just doing what's necessary, doing the preparation necessary in order to succeed. That's what we're here for, and that's what we're dedicated to doing. So good morning, everybody. Hope you had an amazing night's sleep and you're ready to get after it here today. This morning, got up, got my run in. Still, some congestion going on. Got some, kind of throat issues, but we're pushing through. We're making it happen. And I was happy to get out there and get that sweat in, even though it is incredibly hot outside. But one other thing that drove me this morning was the fact that we got the first football game of the NFL season today. So I could naturally barely get any sleep, even doubled up on the melatonin, and I'm very, very excited for that. So, yeah, you couldn't keep me down if you wanted to. Determined to have a great day, most definitely. But as always, whether you're watching live or via replay, make sure you throw that one in the chat, signifying your intention to get 1% better by the end of this session. If you can do that, right, you fulfilled your obligations to yourself, right, in order to close the gap between where you are and where you're destined to be, where you want to be, where you envision yourself being. In terms of our top news here, ready for kickoff, the NFL season will begin tonight with the defending Super Bowl champion Kansas City Chiefs playing the Detroit Lions at 8:20 p.m. Eastern Standard Time. It will be front and center for the sports betting industry, which will continue to watch pro football matchups until the Super Bowl in Las Vegas on February 11th, 2024. Ahead of the first kickoff, an annual survey released by the American Gaming Association forecasts a major increase in the number of people making bets during the 2023 NFL season, with 73.5 million U.S. adults placing wagers this fall and winter versus 27 million in 2022, which is crazy. I mean, that's like more than 3 times more the amount of people, which I don't doubt. DraftKings, FanDuel, all that. Betting via the app, via mobile, became legal in a lot of places last season, and a number of people picked up on it. I know because I put a bunch of people on it, right? Because you get free credit for referring people. So I had mom, dad, grandma, girlfriend, everybody, right? If you knew me close enough and I had access to your phone, I was downloading FanDuel so I could get those free credits, right? And yeah, I mean, I don't know. It's a fun time, right? But in terms of how this manifests for markets, right? It's really DraftKings that you're kind of keeping an eye on. DraftKings, Penn, and then Disney with ESPN, right? ESPN making that deal recently. But let's get into this because I'm getting a little bit ahead of myself. But in terms of the league, the new season begins with FanDuel and DraftKings holding the top spots in the sports betting market, with their shares up 25% and 175% year to date, respectively. BetMGM, whose ticker is MGM, Caesars Entertainment, whose ticker is CZR, and Bet365 are still scrapping to nab market share, while players like Fubo TV, whose ticker is Fubo, Fubo, Maxim Bet, and the online sports betting arm of Churchill Downs, ticker CHDN, have ceased operations or cut down dramatically on their reach. PointsBet has also agreed to sell its U.S. business to Fanatics, ticker FANA, with betting operators focused on profitability at all costs. So the biggest wild card to watch could be Disney's ESPN Bet entering the sports betting scene through a deal with Penn Entertainment. ESPN Bet is not expected to launch until the middle of the season, but will get an immediate push from ESPN's broad football coverage across different platforms. Quote, since ESPN has to promote the ESPN Bet concept via odds, attributions, digital product integrations, and such, the deal is basically a marketing agreement for the sports brand. And I think it's going to be big for ESPN, right? They're late to the ball game, but at the end of the day, they're still a very dominant sports media force. So they're going to be pushing that, right? So gone are the days where you could sit and watch ESPN and not have there be betting odds and gaming specials and all that flashing across your screen, because that's what's going to happen, right? As soon as ESPN Bet is up and rolling. They already have, tons of commercials from DraftKings and FanDuel, but get ready for even more. In terms of other picks, if the launch of ESPN Bet leads to a jump in promotional activity in the sector, gambling.com, ticker GAMB, has been called out as a stock that could benefit. Looking at the broader sector, Genius Sports, ticker GENI, has been mentioned as a supplier of mission critical data, as well as sports betting provider Flutter Entertainment. The Round Hill Sports Betting and iGaming ETF, ticker BETS, BETZ, is also up nearly 20% on a year-to-date basis, with DraftKings and Penn Entertainment listed as the two top holdings in the fund. So it's really kind of DraftKings that ends up getting, the most attention, I feel like, just because they're publicly traded here. And DraftKings is very well known, and they also hold, like a large portion of the market share. So if anything, DraftKings is something to look at whenever you get to a time of the year where there's a lot of gambling. They're viable to see some headway. So DraftKings, in terms of like looking at the chart, if DraftKings can make its way over, what's this level here, 30.50, right, 30.5. DraftKings can make its way over that, then I like DraftKings as the possibility for some call swings, right? Like 2 weeks out, but the issue is it making it over that, because as of right now, all it's done is kind of potentially double top out in that area. And if that does end up being the case, and DraftKings comes down and loses the middle of this area, right? If at 29.08 we lose that on the hourly, I like DraftKings puts, right? Either lotto puts or next week puts, in terms of whenever that happens. So DraftKings is on watch, right? And I'll go ahead and set some alerts, but 29.08, DraftKings gets beneath that, holds beneath on the hourly. DKNG testing, hourly, double top breakout, right? And then if DraftKings closes above 30.5 by the end of the day, I like it. Let's see here. Testing, daily, bull flag, breakout. As of right now, it's rejected that breakout. It tried it yesterday, couldn't get it to go, so it came back down, right? So let's see what ends up happening with that. But as of right now, looks like it might end up being a double top. We got to see. In terms of tech news, AI disclaimers, Google, ticker GOOG, and the GOOGL has introduced a new policy that will mandate political advisors to prominently disclose when their ads contain AI-generated material in an effort to increase transparency and curb the spread of inauthentic content. The mandate will go into effect in mid-November, a year ahead of the U.S. presidential and congressional elections. The move comes a week before top tech executives are scheduled to meet Senate Majority Leader Chuck Schumer in Washington to discuss AI regulation, including Alphabet CEO Sundar Pichai and Meta CEO Mark Zuckerberg. On the other side of the pond, Europe has already called on online platforms to label AI-generated content, which is also a step back by the majority of Wall Street Bet subscribers. Excuse me, not Wall Street Bets, Wall Street Breakfast. I see WSB and immediately think Wall Street Bets. But yeah, I feel like this is something that they're going to end up having to identify, because there's going to be more and more AI generated material, AI generated content. And people are going to want to know, okay, did a robot write this? Did a person write this? Does it matter in the long term? I don't really think so, right? At the end of the day, it's like, who cares if a real person wrote this or if AI wrote it? Especially if it's like an ad or whatever, like what really ends up being the material difference? I don't know, right? Is that, I don't know if it matters to you guys, but personally, to me, if someone's trying to sell me something, I don't really care if it's a person or if it's a robot that wrote it. It's an ad, right? They're trying to sell me something. So it's like they're trying to accomplish a goal, and either I want to buy it or I don't want to buy it. But I don't see why it's like sketchy for a robot to write it versus a person. Like, that just doesn't. Either way, they're trying to get into your pockets. I don't care if, it's like, if, you have to disclaim whether or not like this ad has pictures of dogs, right? Because people love dogs. If you look at the amount of commercials with dogs, it's tons of them because people just show, a positive reaction to dogs. It's like if they made you say, hey, this commercial has a dog in it, beware. It might consist of, emotional manipulation. It's like, yeah, they're trying to convince you to purchase something. So I don't know. I don't really see the issue. But I get it. People want to know, I guess they're being talked to by a human or by a robot. In terms of real estate, we negotiate. Shares of WeWork jumped as much as 18% on Wednesday before erasing all the gains and then some after the company said it was renegotiating almost all of its leases to fix its inflexible and high cost lease portfolio. Even after taking actions to improve its real estate footprint, WeWork's current lease liabilities, which make up more than 2/3 of its Q2 operating costs, quote, still remain too high, said CEO David Tolley. After sounding the alarm on going concern risks, the cash-strapped co-working space provider began talks with 3 asset managers about its restructuring plans, including exploring a Chapter 11 bankruptcy filing. WeWork wants to avoid bankruptcy, but it will depend on whether the company can end or renegotiate most of its leases and reduce its rental costs. Now, in terms of cryptocurrency here, that's a Riot. Riot Platforms has been losing money due to less profitable mining and soaring energy prices. It's now relying on credits earned by curtailing its power consumption during peak demand in Texas. With a scorching heat wave enveloping the state, the second largest Bitcoin miner earned 31.7 million in credits from power grid operators or operator ERCOT in August alone. Wow, surpassing the total credits received in 2022. The credits, which significantly lowered Riot's cost to mine, equated to roughly 1,136 Bitcoin, much higher than its Bitcoin production in August. Riot CEO Jason Les believes its power strategy is a key competitive advantage at a time when Bitcoin mining has become increasingly less profitable. It makes sense, right? If Bitcoin's price isn't soaring currently, which it hasn't been, it's been kind of stuck. If Bitcoin's price isn't soaring currently, then there's no real reason for them to continue mining Bitcoin, especially when it is a huge energy cost, right? And it's crazy that they're actually getting paid to not work at this point. That's like your boss saying, "Hey, I'm going to pay you to not work." Or let's say you have the owner of your building, right? Your boss is like, "Hey, come in and work," and you're like, "Actually, as the owner of the building, I'll pay you to not work." So instead, you sit there and you don't work, and they're getting paid from credits of not contributing to increased power grid usage. So I think that's pretty crazy. Riot, we're very familiar with, right? We tend to trade Riot a lot whenever there's any type of crypto related movement going on. So it's something. It's a ticker that we're very familiar with, but haven't checked in on a bit. Let's see what we got going on with Riot. I mean, not much, right? Not a whole lot that's looking super enticing here with them. So yeah, I mean, it's pretty much until Bitcoin gets started moving again, or there's some type of crypto news that is enticing. There doesn't really tend to be any movement with Riot or Mara or Coinbase, etc. In terms of what we have going on here in today's markets, mixed bag. In Asia, Japan, we're down 0.7%. Hong Kong, we're down 1.3. China, we're down 1.1. India, up 0.6. London, we're down, or excuse me, up 0.3. Paris, up 0.3. Frankfurt, up 0.1. The Dow flat, S&P down 0.4. NASDAQ down 0.7. Crude down 0.6. Gold flat, Bitcoin up 0.1. Now, all of our markets are down because Apple is down another 3% to start today. Because right after the bell, China comes out and basically says that none of their government officials are allowed to use Apple iPhones. And we just now see what has already been brewing, right? Throw a 3 in the chat if you've heard me talking about Apple moving out of China, right? Apple's relationship deteriorating with China. Apple, flat out, you cannot own an Apple phone if you are a Chinese government worker, right? Which is huge. That could just be the start of China's war against Apple. We already had the issues with, the riots at the Foxconn factories. Apple's moving all of its production really to India. And Apple is pretty much at war with China. And this is just, China's further escalation of that. You have a lot of private companies. Again, when we talk about, the writing on the wall, all of these companies are moving out of China, right? Which means something. You don't see for like 3 years, right? Companies moving out, and really accelerating that over the course of the past year and a half, 2 years, and not expect something to happen, right? People are expecting conflict. At this point, people are expecting war, and all of these private entities are trying to move out of the way. So yeah, that's what we got coming into today. As soon as I saw that headline, I was like, wow, this is one of the reasons why you play it light on a week like this. Why I'm glad we got this news this week versus next week, because next week you might be playing around with full size. This week we're not playing around with full size because we got a short week, right? Low volume, things like that. But Apple is something where I've talked about Apple a lot. We've talked about them moving their production to India, right? We've talked about that pretty nonstop over the course of the past few months. And yeah, that was a big story that broke last night. That I saw that and I was like, yeah, this is definitely materially going to affect how we open up tomorrow. And Apple, again, literally down 3% back-to-back days. Opened up down yesterday, opened up down today. And, made a nice bag off of Apple yesterday as well. Had a nice hourly double top coming into the day. And that paid well over 200% on puts during the day. So, yeah, in terms of like Apple today, we'll see what it's got. I'm not a fan of like trying to over milk anything, but if the opportunity is there, I'm going to be looking to take advantage of it. In terms of today's economic calendar, we also got jobless claims this morning. Let's see how those are looking. All right, let's see. Okay, U.S. initial jobless claims actual 216,000 versus 228,000 previous. The estimate was 234,000. So we have less jobless claims than what was anticipated. That can end up being bearish for markets, right? You want more people jobless so that the Fed can maybe not continue to increase rates. In the U.S., continuing jobless claims actual, those were better than expected as well. So overall, it's kind of like it can vary kind of how the market interprets this data from for the past few times that we've got it. But overall, it's one of those things where it's like you want employment to be weakening in order to kind of have bullish sentiment in markets. So that definitely doesn't help as well. So we can get like a compounding effect of, Apple getting punched in the face, right? Not even in the gut. I mean, Apple just now taking another nosedive ever since we started this segment, or just before at 8:30 started taking another little dive here. So Apple really just losing it, right? We went from a green apple to a red apple. But I'm not mad at it. It pays both ways, so most definitely bring it on. Let's see what else we got going on here as we wrap things up. We got members of the Fed talking, but nothing super important. What else is happening for our rapid fire bullet point rundown? Meet the big tech gatekeepers list of the European Commission. AMC sees largest drop since 2021 on proposed stock offering. GameStop, ticker GAME, gains after posting narrower than expected Q2 loss. Biden administration to cancel drilling leases in Alaska wildlife refuge. Roku pops on job cut plans and Q3 revenue guidance boost. Apple slips as China orders government agencies to stop using iPhones. Pentagon said to plan massive AI fleet to counter China and other foes. Comcast, ticker CMCSA, says Hulu sale process will start September 30th. And then shares of C3.ai tumble as path to profitability expected to be longer. Then VMware/Broadcom deal spread narrows amid reports on China review. So that's it. That'll wrap us up, put a bow on it, and take us out for this morning's session, right? Pre-market prep for September 7th, 2023. This has been a week where, we're not overall going crazy in size. There's no reason to on a short holiday week. You guys know the all right, see profit, take profit, to be patient, remain ready to fake outs, right, to have to deal with that, and your expectations coming into the week are everything. So as long as you hold the correct expectations, you can't blow up an account on a week if you hold the right expectations of it being an account blow up week, right? Because again, it's not the weeks where we're moving crazy that your account gets destroyed. It's on weeks like this where it's low volume, low conviction, chop, right? We end up closing the week pretty much where we opened it. That's the week that tears you up, right? So keep that in mind. Can't go wrong. Excited to see what we end up having today. SPY has, daily uptrend support at around that 440, 478, 445 area. We bounced off that uptrend support yesterday at around 444, right? We got a nice perfect bounce off of that area. We'll see if we can hold it, right? If Apple causes us to lose it or if we hold it, but that could be very intriguing with us heading into the end of the week, right? We could come up and test that whole area. And if we close beneath, I like puts going into tomorrow. If we close, above that 445 area, then we can get the bounce that we got at the end of yesterday. We can get that continued. So I'm excited to see what we end up getting. Let's dive into it and let's have another great day. I'll see you all back here tomorrow morning for our last Premarket Prep session of the week. Have a good one.